Today's topic is how to borrow money in your self-managed super fund to buy property. There's a bit of paperwork to follow this process. First thing that has to happen though, you need a superannuation fund obviously, and that fund has to have a trustee, and that trustee needs to be a corporate trustee. The second thing that has to be set up, which is rather unusual, is there's this thing set up called a bare trust. We call it a property trust, and you substitute that property trust in between the super fund and the property that you're going to buy. That property trust does need a separate corporate trustee because these are just the rules. Now the next step to take is the best step. You go and find a property. So if you've got your structures right, you go out and you find a property. Never go and find a property and buy it and ask for the structure. Set the structure up first. So once you've got the property, and it's also good to have your finance pre-approved or understand you'll get the funds from the bank. So once you've bought the property, then you go and arrange the funds with a bank or a lending institution. So the steps then are pretty simple. Your super fund pays the deposit to the vendor. You borrow money from the bank to settle, and the super fund has to come up with the balance of the money, of course, because the banks lend up to a certain loan-to-value ratio. Currently it's 80% for residential property, but it does change, so don't stay with that. Then going forward, the process is really simple. The rent of that property gets paid into your super fund. The super fund pays back to the bank the interest and the principal on the loan. The super fund also pays all the expenses, whether it be water rates, council rates, land tax, whatever they may be. In addition, your super fund contributions go into the fund. So the fund has got money coming from rent, money coming from contributions, and it pays the interest on the loan and the other expenses, as I say. And over a period of time, you can reduce the loan. Alternatively, you accumulate more money. After you've paid the loan off, the property is transferred from the property trust into the super fund, which becomes the owner of the property. And that's the simple way of how your super fund can borrow money to buy property.